14 minutes past the hour. This is CNBC's Worldwide Exchange, broadcast live from Asia, Europe, and the United States.
As part of our daily global stock picking segment, today we want to drill down into China versus India. Where should you put your money? Emily Sanders is president and CEO of Sanders Financial Management. She joins us now. I'm looking here. You say India is better short term, China is better long term. Emily, why?
Well, Michelle, India is growing at 8 to 9% GDP versus China's 10 to 11% GDP. So both are absolutely fantastic and large growth rates. However, for the short term, India's stock market was up 51% last year and only 5% this year versus 135% for China last year and already 52% year-to-date for China. So China looks to be getting a little ahead of itself as all the bubble talk we've been hearing.
You like Tata Motors. Why?
Well, Tata Motors is primarily a producer of trucks and buses in India. However, their car growth is growing at about 20–30% a year due to the rising middle class in India, which is somewhere between 250 and 300 million. So they're devising a very innovative $2,500 car that will be rolled out sometime around 2008 or 2009 and will probably have more applicability in other emerging economies. And that is going to be a really big boom for Tata Motors. Plus, it's trading at a low PEG, price to growth ratio. And so we think it's a good buy at these levels.
Emily, it's Louisa here in the studio. It sounds like a song, but it's not. ICICI, what are your thoughts?
It does sound like a song. And ICICI Bank is one of the major commercial banks in India. It is also capitalizing on the growing middle class. I mean, the middle class in India is about the size of the total population of the U.S., about 300 million. And these are people who have been traditionally underbanked. So there's been about a 50% increase in consumer loans, about a 30% increase in commercial lending. ATMs are starting to go in throughout India, cash machines, and it's just really a booming situation. Plus, ICICI Bank is also doing microfinance and starting to become profitable at that, where loans are being made in the villages and rural areas to groups of women to start their own businesses. So we feel that capitalizing on the global merger mania in the banking industry, as seen just today with the big merger in Italy, eventually all that consolidation is going to spread to India as well.
Okay, so you like two Indian stocks. Christine here, by the way. Emily, you also like a Chinese company called Suntech Power Holdings. They specialize in solar energy. Why do you like the company?
Well, the whole global boom in green awareness, you know, all the governments that are looking at carbon emissions and the private companies that have announced green initiatives, and even private individuals that are starting to put solar panels on their homes. The company in China, STP, is actually able to manufacture the photovoltaic cells at a lower price than some of their competitors in Europe. And so this is really a good entry point for the green theme, so to speak. And this company also has a low PEG, which we favor companies that have low priced earnings based on their growth rates. And so we want to get in on that early. China is undoubtedly a booming market, and a photovoltaic solar clean energy company based in China is definitely a nice entry point.
Emily, it's Louisa again. I was in Jordan over the past couple of days covering the World Economic Forum for the Middle East, and foreign direct investment into that region has actually fallen over the past 10 to 20 years, although you may think differently. I note that you say India's foreign direct investment stands at some $15 billion and that you're seeing a threefold increase there. Where is that foreign direct investment coming from, and how much more growth can you anticipate in this area?
Well, it's coming from private equity. It's coming from mutual funds that are buying stocks to put in their ETFs and India funds. It's even coming from private companies that are setting up branch offices in India. Some companies, like high-tech companies like Cisco or Accenture, have very big presences in India. Now, India must improve their infrastructure to really have the ultimate realization of their potential, which is why we say that short term we would invest in India and long term we would invest in China, where the adult literacy is much higher in China than it is in India. However, the foreign direct investment is definitely growing in India at a threefold clip.
Which brings us right around to where we started. Nice segue there, Emily. Thank you. Emily Sanders, President and CEO, Sanders Financial Management.
Thank you, Michelle.